Welcome to the Real Vision Daily Briefing. I'm Jack Farley, and I have the pleasure of being joined by Kyla Scanlon. Kyla, how are you doing?
Hey, I'm doing well. Thanks for having me.
It's so great to have you. So you are someone who's been an investor. You've worked at a hedge fund. Now you work in education, and you also are a TikToker. Can you tell us a little bit about how you manage? What tell us about the balancing act?
Yeah, so I used to work at a mutual fund, left a few months ago. And with the balancing act, I just, kind of have a night job and a day job, spend a lot of time on the weekends thinking about content. And usually we'll have an idea for content and do it later that night. So yeah, it's a huge passion of mine. So I always make time for it.
There we go. So, by the way, to everyone at home, follow Kyla on TikTok. She posts something every day. So, Kyla, you like to have a phrase for stocks. It's a very long word. It begins with a PH. It's for when they sort of go up. Can you tell people about what that phrase is?
Yeah, so whenever the market is green for the day, I'll say that the market was photosynthesizing, uh, trying to throw some science into the markets. But yeah, like plants will turn green when they photosynthesize. So that's what I say when the market turns green. And it's a good connector for people, like when they listen to the TikToks and they'll say, oh, the market photosynthesized or not.
And what I love about that, Kyla, is that photosynthesis is something that happens every day. And when you're in a bull market, it kind of feels like the market is going up every day. And it only doesn't photosynthesize when there's a hurricane, which is very rare.
That's true. Yeah. Somebody asked me what we should call like a down day like we had today, and someone was like, call it hemorrhaging. So I don't know if that's the quite the right answer, but yeah.
Yeah,
Yeah.
well, you did have a little bit of hemorrhaging today. Not a lot of photosynthesis in the foliage with the Nasdaq down 2.5% today. That is quite a move, almost as vigorous, I believe, as the move down last Tuesday. And I actually noted this was an hour ago, so it's probably no longer true, but about 11%, 11 of the 100 stocks in the Nasdaq 100 were down over 5% today. So a fair amount of hemorrhaging today.
Yeah, definitely. I mean, the growth stocks have just been pummeled for the past few days and have not really gotten much of a breather.
Yeah, and that came, I should say, on the heels of a move up in bond yields. Bond yields sold off the 10-year. The yield rose about 2.5% to for the 30-year is about to the tune of 4%. So you kind of have that duration play where growth stocks, which are perhaps longer duration assets, selling off, and it was the energies, the real estate, the utilities, the shorter duration stocks leading the way today.
Yeah.
Kyla, I want to get your sense of the growth stocks. I know you've got your eye on a lot of them, stocks like Facebook, stocks like Beyond Meat. Where do you want to begin?
Yeah, we can start with Facebook. So I love Facebook. Well, so I shouldn't say it like that. I think Facebook's a really interesting company. I think that they do have their flaws. I think that a lot of people are underestimating their growth prospects because of Oculus, because of WhatsApp, just the exposure that they have. And yeah, I mean, I think that if they can get Oculus off the ground, which is their VR AR tool, if they can get that off the ground and become a computing platform rather than a social network, that's going to totally change how the market should see them, I think.
So that's Facebook. Now bring us to Beyond Meat, which I understand you have a very different view of.
Yeah, so Beyond Meat, they lost on earnings last week. They did not do so well, and I think that they're interesting because they're still so unprofitable, and there's a lot of competitors moving in the space. And one thing that I'm like a thesis that I'm working through is like what's a good reopening trade. And I don't know if Beyond Meat is quite the reopening trade because I think that we're going to have this return to realness. Like people are going to want to have like real foods, maybe not so much like pea protein isolate like Beyond Meat has. So that's like one thing I think that could impact them qualitatively.
Yeah, so Kylie, it's interesting. On the one hand, as you say, it was a very negative quarter for them. They lost 26 million versus the 11 million expected. They missed their revenue as well as 4.5%. But on the other hand, Kyla, I did see a statement from their CEO, and he did say, "quote Never in my entire career have I been more confident in the future of Beyond Meat." So it's kind of two sides.
Yeah, I mean they do have partnerships lined up, and you could, I mean, really like this that could go either way with regards to like fake meat or plant-based meat. People could lean into it more. I would have expected them to see more growth at this point than they have seen and more profitability. Yeah.
Yeah, or less losing money ability.
Yeah, yeah. something a little bit stronger.
There we go. So Kyla, tell us how you're thinking about the Federal Reserve, the macro forces, interest rates,
Yeah.
Janet Yellen saying this one thing, the speculation in crypto. Bring it all together for us. You've written that the world is full of shortages and surpluses at the same time. What did you mean by that?
Yeah, yeah. So, I mean, the main thing with that, the shortage and the surplus, is that we have a surplus of money right now. There's a lot of money trying to find a home, and there's also a lot of people talking, so a lot of surplus of words, we could say. And then I think that we have a shortage of commodities. So those two things are sort of a balancing act, where you have all this money trying to find a home, all these words trying to find a place to go, and then the shortage in commodities. So it's like those two, differing forces.
Yeah, so with lumber, we've got lumber at over $1,600 all-time highs.
Yeah.
Copper, I think, made all-time highs today, if not on Friday, which was, striking for a very moment. You had a TikTok which I like, which was sort of a guy going into a jewelry store wanting to buy a ring, and the person said, "Oh, here's a golden ring." He said, "No, no, I want something that's been going up a ton." So he first got a copper ring, then got a lumber ring. So tell me a little bit about how you're making sense about this tremendous commodity inflation that we're witnessing before our very eyes, at the same time as the consumer price index is muted, at the same time as we're not seeing the progress in the jobs market I saw on Friday that many were expecting.
Yeah. Yeah. I mean, so like, I make a lot of content around commodities because I think it's really fascinating, like the physical constraints. Like you can't literally, you'd have to expand production in order to like have more of that. Like it's not something that you can do cloud computing wise. And so I think that's like really fascinating. And we're topping all-time highs in all of these different commodities. So lumber, like you said, copper, all of them are just corn, all of it's reaching all-time highs. And I really worry from a supply chain perspective, like how that's going to show up in prices down the road. Because like right now, companies could pass off those increases in prices, which several of them have done, to consumers. But it's also at the end of the day, it's like, okay, so prices might be increasing, but we're not seeing that show up in inflation numbers, like what's going on there. And when the Fed says that things could be transient, like maybe they're right. Like maybe the supply chain shortages can be fixed, like production can be expanded. But there's such a misbalance between supply and demand right now because of reopening demand, because of all of this stuff. That it's like how much short-term pain will be priced in and how much short-term pain can the Fed sustain, and like are they willing to take on? And so those are all questions that I'm like trying to work through. And even if they even if they raise rates, it's like, okay, so what's next? Like you still have these massive shortages, and raising rates isn't going to fix that, or lowering them at this point isn't going to fix that.
Kyla, what do you mean when you say the pain? It's not that the asset prices are going to go down, and right, it's not that unemployment is going to exacerbate. What do you mean by pain?
Yeah, I mean, I think just like pain and price numbers. So like everyday goods that you buy, like a lot of people have said, you're seeing everyday goods go up in price. Like somebody on Twitter today was like, my Starbucks drink is like $2 more expensive than it used to be. So you're starting to see companies have to pass those costs off to consumers. And so they can either do that, they can either pass cost off to consumers, or they can shrink the products that they're selling. So shrinkflation. So the opposite of inflation would be shrinking the products. And like both of those are bad in the end, like good for the companies, quote unquote, but it makes consumers less trustworthy, and that'll show up in profit, or it makes consumers trust the companies less, and then that shows up in stock prices eventually, right? So I think that's like the big worry is like, what are companies going to do? What can they do? How much increase in prices are we going to see, and how is that going to show up in grocery bills? How is it going to impact like this sort of recovering after the pandemic as everybody tries to get back on regular footing? So yeah, it's all of like the regular people things, I guess, like not even asset prices, just like how do we live in our day-to-day lives? And I think that's like what I worry about with supply chains.
So what's the trade, Kyla? We were talking about earlier. You could buy an energy ETF. There's also a ETF that for lumber, I believe that the ticker is WOOD, just wood, basically the sort of timber companies. What's the trade? What are you looking for if for the ultimate reflation, the ultimate commodity inflation bet?
I'm looking at home builders. I don't know if that's like the best answer, but I think that there's like as you know, right now we're I think reaching the sort of a peak in that bubble, but I think that that could be an interesting place to play. Um, but yeah, I mean, I think with commodities, like you could get into some of the commodities and sort of have it top out at all-time highs, but then you could also do like derivative plays. So like as you
Mhm.
look, maybe even getting into semiconductors, so like all of these different things. Like who's going to have exposure and who's going to benefit from supply chain shortages is a good place to look.
Yeah, I should say to everyone at home. So you see Kyla, you hear that she's a TikToker. You might have a certain impression, but Kyla's been trading these markets for a long time, and she's had her eye on the trading options and derivatives in these markets. So she's a very sophisticated person. Kyla, I want to ask you, sophisticated person, a sophisticated question. Tell me about what you're seeing in the futures curves in these commodities, because what I hear is that 70% of them, or some degree, are in backwardation, meaning
Yeah.
you're kind of getting um, paid to own them, which is very favorable for commodity investors, which in some ways can exacerbate the bubble. Tell me about that.
Yeah, I mean, I think it just shows how much demand that there is. Like there's a ton of demand out there and a huge misbalance between supply and demand. And that's really what it boils down to at the end of the day is like, yeah, people are willing to do crazy things in order to get that across.
Yeah, what I think of it is kind of like normally you would, let's say if you ran a feeding farm, like a farm of cattle, and you ordered corn, you'd sort of weight your orders of corn. Like I'm going to order a May contract, I'm going to order a June, and it's going to be very orderly. But when there's a huge shortage, you just order, I need all of it now. So that inflates the price for the spot price, and then there's less demand relatively in the later tenors. Um, Okay, so I know. This is a perfect segue, Kyla. So we've had this commodity inflation. The CPI that we saw last month, 2.6% compared to 2.5 expected. It was kind of a nothing burger, but the inflation break evens are ripping higher. The
Yeah.
2-year break even reached, it exceeded its, I believe, 2007 high,
Yeah.
a month ago, and I think the 5-year did that today. It exceeded its 2007 high today, if not on Friday. So really, even if the consumer price index, the CPI, the PPI, whatever, floats your boat, if you're not seeing any economic data, the market is pricing it in. What do you make of that?
Yeah, I mean, I think the market made that pretty clear. Like with the 10 years, like they're expecting inflation to come. Um, like I think that it's hard to look at some of the economic data and say that there's not going to be inflation down the road. Like getting back to the supply chain shortages. Uh, so I think the market is aware, and like it seems like sometimes the only person who doesn't want to talk about it is the Fed. And maybe it is transient, but yeah, I think that the market is definitely making itself is building around that for sure, that narrative.
So the Fed, they're sticking to their line. It's going to be transitory. However, Treasury Secretary Yellen last week said something slightly different. What did she say, and what did you make of her remarks?
Yeah, yeah. So she said that rates might have to rise if the economy is overheating, and that's not wrong. Like you theoretically should increase rates if the economy is getting overheated, um, and but she kind of when she said that the market sort of went into a tailspin, a small little tailspin, VIX popped, everything like that, and it just showed how far we are, I think, from the market being willing to have even a conversation about raising rates just based on that reaction alone. And there was a couple like components to that. Like she overstepped, right? Like so she's supposed to be focusing on fiscal policy. Now she's talking about monetary policies. They're not really supposed to do that. And then she retraced her steps and was like, oh no, I don't think inflation is here. Like everything's fine. We don't need to raise rates. And so I think like that happening just showed, yeah, that the market is really reliant on communication, and really needs to be eased into the idea of easing up on monetary easing. So,
Oh yeah,
uh, yeah.
it's definitely a game of narratives. It's a game of I say it and you believe it, and if you believe it, the market goes a certain way. If you don't believe it, it goes a certain way. And it's kind of like options where it's path dependent. Once the market has gone a certain way, there's no going back to that parallel world.
Mhm.
But okay, so that's what Janet Yellen said. Now explain to us just the dividing line between fiscal and monetary, where Janet Yellen basically wanted to dictate monetary policy over which she used to exert control as chairman of the Fed, but now she's in a different role. And I don't know. I know you have a lot of thoughts on that.
Yeah, I mean, it makes sense like why she kind of put her Fed hat back on and weighed in. Like she's very used to doing that. But I think that it was so interesting because she spoke out against the narrative that Jerome Powell has been pushing so hard. Like, we're not going to raise rates. We're not going to raise rates. We're not even going to think about thinking about raising rates, you know? And then she comes out and is like, yeah, you know, we might. And then Biden, it was like, I agree with her too. And so I think that just like, you know, that's fiscal policy is supposed to be like government spending, taxes, all that stuff. They're not supposed to mess with raising rates because that the Federal Reserve is supposed to be an independent entity. So kind of seeing that crossover, I don't know if jarring is the right word, but it was like, okay, like there has to be coordination to a certain degree. And the Fed, you know, independence might be not the main priority all the time.
Hmm. So
Yeah.
all this that you said, Kyla, I would characterize that as within the mainstream discourse over monetary policy. But I was reading your work or your blog, which I recommend people should read, and there you made a claim which struck out at me as not being within the mainstream. And that phrase is the following: that Janet Yellen and Dogecoin are saying the same thing.
Yeah. Yeah, they're both rallying cries against the establishment. But yeah, so expanding on that, like, so Janet Yellen wasn't supposed to say what she said. Like, she went against a narrative that has been built up over the past several months. Like, we're not raising rates, we're not raising rates. And her speaking out was, you know, the sign that like she was stepping out of bounds, right? And I think like with Dogecoin, and we can talk about Dogecoin a little bit more, but like Dogecoin
Yeah.
itself is also sort of like a rallying cry against, I think, sort of the traditional financial system and like the traditional ways of valuation and everything traditional is sort of you know, disappears under the guise of Dogecoin.
Hmm. Tell us a little bit about Dogecoin. Let's get into it. What's your take on it? So, everyone was expecting the Elon pop that
Yeah.
that would go up during the SNL. We saw the exact opposite. The price is depressed. Now it's sort of like what 50 cents. So
Yeah.
what do you make of this? It's so bizarre to me.
Yeah, I mean, Dogecoin. So it's sort of funny. I was making videos about Dogecoin back when it was like 2 cents about Elon Musk and Dogecoin, and like, oh, every time that he tweets, like it increases an X% in value. Um, and so now it's like it got all the way up to 70 cents, and I look back and I'm like, wow, you know, he's been sort of memeing this entire time, and it's worked. And so I think with Dogecoin, it's just so reliant on communication and sort of like this collective belief behind the value of an asset. And I think with SNL, it's just such a good selling opportunity for people to sort of take profits in case the whole thing did crash. So I think that's what happened there. But yeah, it's sort of funny because I mean, there's definitely core developers behind Dogecoin. Like, I don't want to discount that. Like, I know that there's developers and that there's people who are thinking actively about how to make the Dogecoin community better.
And Kyle,
Um,
sorry, I've got a question. Are those developers, have they been at it for like 5 years, or they sort of they've joined the game over the past 3 months? They've sort of followed the price.
Yeah, I mean, I think like I know the founder of Dogecoin has been around for a while, and I'm sure there's been some developers there for a bit. I don't know entirely like who like the amount wise, but I think people are potentially trying to build it into a couple of different things. I just think it's so it kind of bothers me because it's like it's supposed like a lot of people say, oh, it's the people's currency, but then you have people like Mark Cuban who's like, oh, it'll be a stable coin one day, like it'll get pegged to a dollar and just kind of stay there. And then you have Elon Musk, like respect to both of them, but Elon Musk who sort of like has memed it up and then it's like, oh, we'll accept payment for SpaceX travel now in the form of Dogecoin. And it's like, oh, I'm sure there was some incentive there to sort of like pump it up like that and then accept payments and sort of tie him. So yeah, that's the whole thing. It's like it's supposed to be this like free currency for the people, and I don't think it is.
Yeah, well, it's hard to have a free for the people currency when its most notable advocate is the world's richest man.
Yeah, it's almost backwards, right? Like it doesn't seem right at all that it works like
Yeah,
that.
yeah, I will say definitely the people who buy it and trust it. I mean, it does have a team of core believers.
Yeah.
That is something. So that's Doge. Now I hear, Kyla, and you told me this today. I've never heard of this today, but I want you to explain it to the audience. Dogecoin may have a rival. Can you tell us about this?
Yeah, so there's a Shiba coin, $ Sheeb. I think maybe Sheeb, yeah. So that started trading, I think, on Binance today, and it's just like another sort of pump coin. I don't know if that's the right thing to call it, but ever since GameStop, I feel like these things keep on popping up where it's like, oh, like we'll get together behind this one coin or stock or whatever and pump it, and then we'll take money and leave. A pump and dump, I suppose you could call it. And yeah, so Shiba's kind of the new one there. I don't know enough structurally, like it might be really great structurally, but yeah, that seems to be the new crypto play that people are moving into versus Doge.
And is it big?
Yeah, it was trending on Twitter. So I don't know if that means it's big in Twitter world, which is like a relatively big world, I guess, a microcosm.
Yeah,
Yeah.
yeah. And I read the article that you sent me, and it's been around for, I guess, a little bit, but it was only recently that it was added to Binance, and not just sort of the spot price. You can also trade something called a Shiba perpetual swap, which is kind of like a futures contract, but the future is forever.
Yeah, that's so fitting. Yeah, I mean, it'll be interesting to see. It's sort of like if crypto does, if some of the crypto coins do enter a bear market, if the stock market does enter into a bear market, what happens with these more, I suppose you could say speculative assets. But yeah, it's a structurally very interesting to watch.
Yeah, everyone talks about how crypto is uncorrelated to the market. So if the S&P crashes 70%, it'll be interesting to see what DogeCoin does. I mean, it could crash alongside it, could crash more, could be stable, could even go up. Who knows?
Yeah, I mean that's kind of so like with the with the sell-off and growth, like I wonder, you could say hypothetically people might be rotating into Dogecoin versus rotating into value.
Oh
um,
man.
which
Oh.
is fun.
Jeez. Okay. Well, we do have a question, and actually this goes back to topic of inflation from Juan Uribe, who asks, Kyla, please make the case against a transitory spike in prices. Why do price increases stick? Uh, you know, other than just saying that price increases are sticky. So basically, why won't it be transitory?
I mean, so like there's a couple of things and it works its way up through the supply chain. So like if you raw materials, like if raw material prices stay expensive, like products are going to have to stay expensive. And then same with like the production processes, if those stay expensive. So like sawmills, for example, with lumber, like if there's capacity constraints there and that's not fixed, and it's not transient, right? So it's not fixed right away, like that'll show up in prices. And then I think businesses, like once you set a price higher, there's really not a ton of incentive unless you're Amazon to like push it back down. And so I think that's like a pretty important point. And also like, another thing that we didn't really hit on was like wages. So there with the jobs report, right? So like there's a huge miss in the jobs report, some speculation that, wages aren't high enough and you're gonna have to start paying people more. And all of that's gonna result eventually, potentially in higher prices too. So structurally, I think, higher prices are always like once prices go higher, it's like they kind of have to stay there more or less.
Yeah, there's this saying like volatility begets volatility, and I think you could say high prices beget high prices, because if people are earning or getting paid, above $15 an hour by the government, then yeah, a place like McDonald's or a place like Chipotle, where I read an article about them over this weekend, or not great labor practices perhaps, they're going to have to pay more. And once those workers get paid more, are they going to accept that they will be paid? Are they going to accept pay cuts just because Chipotle is going to show them a report from the Bureau of Labor Statistics or like the PCE? I don't think so. So I actually think, Kyla, in terms of what you and I believe, we do think that it is that it will last, and that we're somewhat inflationistas. But tell me, so Juan, who says, please make the case against a transitory spike.
Oh,
In price. Actually, no, sorry, no. Juan, we did what Juan. I misinterpreted what Juan said. Now I've got a question for you. So going back to Dogecoin, Janet Yellen, tell us. This reminds me of a theory that you stated, which is the easy money flywheel. Can you just break down that us? I'll post a screenshot on Twitter later, but just break down for us.
Yeah. So I mean, it's just like a way to visualize, I think, the process that I was talking about in the article. But so you have like low rates, right? So you have low rates right now, and that leads to easy money. So like lots of money flowing around, theoretically, and then that leads to excess dollars. And I think the excess dollars go into one of two directions. So they demand real products, which is why we see the shortage in commodities and all like the demand for homes, all that stuff. But then the excess dollars also go into speculation. So that's why we see like pops in Doge, now Shiba, all that stuff. So I think that's kind of like what, and obviously there's other factors besides low rates, but with easy money, that's the two main drivers. And then that all leads back into like financing for companies too, which is, yeah.
Yeah, and it's all connected. You know, there's some kinks in the treasury curve that sometimes briefly go negative, and it's not that the institutional banks and money managers who are buying that negative yielding paper are thrilled about it. It's just they have no choice. There's no place else to put their money. If they want to take a little bit of risk, put in the 10-year, that moves the 10-year yield down. Then the people who are buying the 10-year, they have to buy investment grade. That pushes the investment grade down. Then they have to buy high yield. Then they have to buy, value stocks, the growth stocks. And then sooner or later, you wake up in a garbage can after a night of partying and you're just own, tons of Dogecoin.
Yeah, right. Yeah, that's the exact process. Yeah, I think it's right. Yeah, and like with high yield, like that, those yields have been pushed down to like the absolute, bare minimum. Like people are so hungry for risk, they're willing to take on so much risk. But also you could say like with the easy money flywheel, the Fed is backstopping a lot of the risk. So it's like even these companies that are high yielding, that have risky balance sheets, the Fed is going to be like, oh, don't worry about it. Nobody's going to default under our watch, more or less. So I think that's like another risk too, is like you have so many zombie companies that could be here for no reason.
Yeah, for the folks at home, a zombie company is a company whose interest payments exceed its profits. So basically, it's almost doomed to get more and more indebted over time. Kyla, I have a question for you, which is I actually think that April is the only month on record since for at least 2 years where you haven't had any high yield defaults at all. And as we were talking about before, the yield on the high yield is now extremely low in terms of spreads of 2.5 basis points. For triple C's, I think it's 5.5, 6%. Very, very, very low. My question is, do you really think that the Fed will backstop the credit market, the least credit worthy, the worst rated triple C's, after it has just inundated the market with liquidity for over a year? I mean, do you think that sort of, I forget the name of the program, but the actual Fed backstop, which was, they buying high yield bonds, which they only did a certain amount of, do you think that that's still on the table if the S&P remains over 4,000?
I mean, I don't think so. I would hope not. Like, it wouldn't make sense, but I think it kind of boils down into market sentiment again. And obviously, structurally, like if companies can't make their payments, like that's a whole different issue. But I think that there's sort of this feeling that like, the Fed will swoop in and sort of save the day. And that carries, I think, into yields and balance sheets and how companies can conduct business. So
I'm so thrilled you brought that up. Did you have something else to say?
No, I was just saying, like, I don't think they're going to say it explicitly, but yeah, implicitly, maybe. Yeah.
For sure. Well, on the topic of low yields and balance sheet management, I've got quite a story for us to discuss now, which is that Amazon, the technology behemoth, online retailer, issued a bond for an absurdly large amount of money. It was $15 billion. That was what I read at about noon. Later, it turned out it's actually $18.5 billion, the largest issue that Amazon has ever issued, one of the largest issues in corporate bond history, and it's in 8 parts. They've got like a 1-year part, a 2-year part, a 5-year part, 10-year part. So it's got 8 tranches. It's kind of like, a long novel that has just like 8 different, it's kind of like War and Peace,
Yeah. Yeah, I know it's impressive that they're able to do that. Yeah, it's rates are pretty low. I think that's what that signals. Yeah.
And by the way, Kyla, the longest duration part, the 40-year bond, do you want to know how much that yields?
How much?
95 basis points over treasuries.
Nice.
So basically nothing.
Yikes. Wow. But people, that'll be oversubscribed, I guarantee it. Yeah, that's like we were talking a little bit earlier too, like the one of the core ideas behind it potentially is for them to buy back stock, right?
Yes, I think so. I mean, it's a lot of speculation. It's buy back stock and keep prices uber low.
Oh, yeah. So, I mean, I guess both of those things make sense, but Um, yeah, yeah, no, it's impressive that they're able to do that. And then also like on the topic of bonds, like with GameStop, and sort of like circling back to the idea of Doge, like the fact that they got that their credit rating got upgraded is pretty interesting. And I think like they've kind of cleaned up, but yeah.
Tell me more about that. Is it, I saw the article that you sent me, but is it just the fact that it's because the stock price is higher, they're able to issue equity and therefore they have more cash, so it's just by definition they're better, or is it they're actually the S&P rating agency, they're actually more constructive on the future business prospects of GameStop? So tell me more about that.
I think it's a little bit of both. Because now that they've got their stock price propped up. I think having Ryan Cohen on the board is always a good signal. But yeah, I think having the stock price propped up by Reddit was really helpful. And then I think Ryan Cohen has some plans for how they can operate moving forward. So, but yeah, it is like without Reddit, I don't think that would have happened though. Yeah.
Hmm.
Yeah.
I think you're probably right. I do it does strike me as a little weird as you have these sort of stocks that get to be increasingly owned by retail, and then the media spins that as sort of a populist revolt. And then when AMC, they were able to
Mhm.
uh, issue additional equity, and it's like the people saved AMC, and I guess that's true. But if you really look at the money flows, it's
Mhm.
retail bought a stock, and then that stock was sold at a high price, devaluing the stock that was just bought, and it was used to pay off private equity people who are like very, very wealthy. So it's not necessarily the populist sort of Robin Hood narrative that gets passed around.
Yeah, I mean, at the end of the day, I don't think any of this is like
Yeah.
I don't know, like with GameStop, like that's kind of confusing. But like I think that there's always somebody on the other side of these trades, like especially with Doge, especially with like maybe GameStop. It's not just the collective populace. It can't be. Yeah.
Right, right. All right, Kyle, we do have a ton more questions. This is
Sweet.
a question about your work specifically. Matthew wants to know, Kyla, what is your ratio of time spent researching versus pondering research versus creating content? How do you see that evolving over time, and why? And that's related to a question that Peter asks. What's your process like making financial TikTok, and how do you manage to stay consistent with daily posting and the overall feed the beast mentality of content creation?
Yeah. So researching, I would say probably spend like 2 to 3 hours a day just reading and catching up on the markets. I trade, so that keeps me a little bit busy. So yeah, 2 to 3 hours a day. Making the TikTok takes about 30 minutes. I've gotten pretty efficient. It used to take a lot longer, but writing the script, taking all my screenshots. I do green screen stuff, so taking all my screenshots, filming. So yeah, all of that takes about 30 minutes. So and with the feed the beast, I like to make little fun TikToks, like you mentioned with the wedding ring one. I feel like that I love making those, so that makes it super fun for me. And I just I love talking about the stock market and all the intricacies of it. So it's not a burden. Yeah, I enjoy it.
And when did you start doing this, Kyla?
I started making the TikToks about 2 months ago, but I've been creating content since I was in college. Yeah, I used to run a blog called Scanlon, my last name, on stocks. So have been chatting online for a while. Yeah.
There you go. Nice, nice. Cal, I want to ask you as we approach a close about the financial stability report that
Yeah.
came out of the Fed. We didn't talk about this beforehand, but I took a little bit of a risk because I saw it in one of your TikToks in the background, and it was one of the rare instances where the Federal Reserve actually did, if not sound the alarm bell, they did issue, kind of murmur that they're a little bit worried about how speculative things are getting, and they're a little bit worried that about the DogeCoin, about what cycle we are in terms of speculation. They say prices of risky assets have generally increased since November with improving fundamentals. Long-term Treasury yields have risen. However, valuations for some assets are elevated relative to historical norms, even when using measures that account for Treasury yields. In this setting, and this is what I highlighted, asset prices may be vulnerable to significant declines should risk appetites fall.
Yeah. What a statement, right?
Yeah, it doesn't sound like a big deal if you're just used to talking to people in a regular way, but for the Federal Reserve, it is quite a statement.
Yeah. Yeah.
They like to understate things.
Yes, they do. Yeah, very, very dovish, one would say. But yeah, no, I think that Yeah, it's just interesting to think about it that way. Like, and I think you can think about it from a few different angles. Like with the reopening, like okay, so people all of a sudden like they don't want to sit at home and trade anymore. So like risk appetite would decrease that way. And then I think another way that the risk appetite would decrease and valuations could be impacted or values could be impacted is if we do have like a significant and a prolonged downturn. So I think like if people see the market, like today was small, like the 2.5% down in the Nasdaq, like that's pretty small. But if we see like 10, 15, like 20% drawdown, how is that going to impact how people see the market? And even as we like quote unquote recover from a drawdown like that, are people going to re-enter? Are they going to be burned pretty badly? Because right now there's so much speculation and there's so much money just expecting that things will go up forever, but things don't go up forever. They're not supposed
Yeah.
to, at least.
And they
So
have. And it's funny. See, you and I, we sort of live in the financial world of financial markets and financial news. So we've been, kind of witnessing firsthand the weakness in the Nasdaq, and we remember the huge sell-offs in February and then March, and we sort of reached a stable footing. I was shocked to learn that before May, the Nasdaq had been up 6 months in a row, despite all that chaos. If you only had checked your account month to month, you would actually not have been pulling your hair out.
yeah.
Do you think that will change?
Well, I mean, the market drifts upward 53% of the time. So I think things trend upwards because companies are growing. And if you think about it from like a fundamental perspective, companies are always growing, companies are always making more money, they're building new products. So the stock market should go up over time. Like it shouldn't be a prolonged downturn. But I do think that I think it would be nice to not nice, but like important, I think, to have a little bit of a pullback, a little bit of a breather of sorts. Yeah.
I always hear people on financial television and other programs say that, and they're always super bullish. So you know that they own tons of these stocks, but then when the stocks go down, they say, it's just super healthy. I
Breather.
love it. It's so healthy. It's like to go for a run, do some yoga. So healthy.
Yeah. They're just taking a stretch.
Exactly.
Got
Exactly.
it. Yeah.
Well, Kyla, we're gonna have to leave it there. But thank you so much for coming on the daily briefing. It's been tons of fun.
Yeah, thanks for having me. It's super great.
Where could people find your work on TikTok, on Twitter, and your blog? Tell us about that.
Yeah, so I'm at Kyla Scan on Twitter, and I'm at Kai dot now, so Kai period now on TikTok, and then my blog is just kyla.substack.com.
Great. So thank you so much, Kyla, and to everyone watching at home. I hope you enjoyed Ral and Ed's talk today, beginning the exponential age, this journey of discovery we're going on over the next 2 weeks. Kyla, you may have heard about it. We're talking about electric vehicles, Internet of Things, and all these exponential technologies that have network effects. Tomorrow, Ral is going to be speaking to legendary venture capitalist and crypto investor Bill Tai. All right, with that, we're going to have to leave you. Thanks so much, Kyla, and thank you to everyone at home for watching.